Did you know that in 2023, the U.S. experienced the highest inflation rate in 40 years? Or that the price of a gallon of gas went up by more than 50% in just 6 months? Hi, everyone, and welcome back to Fun Financial Insights, the channel where we make learning about money exciting and entertaining. And in today's episode, we're going to talk about how to be a millionaire through Bill Ackman's investment strategy in investing in inflation-proof businesses and more. But before we dive into that, let me ask you a question. Do you know what inflation is? What about Bill Ackman? Why is he so important? Are you curious enough? Yes? Well, let's go. Let's start with who is Bill Ackman. He is the founder and CEO of Pershing Square Capital Management, a hedge fund that manages over $20 billion in assets. He has made some of the most profitable and notorious investments in history, such as Valeant Pharmaceuticals, Herbalife, and Chipotle. He has also made some of the most charitable and generous donations in history, such as giving away $3.5 billion to his foundation, the Pershing Square Foundation, which supports education, health, human rights, and social justice causes. He is able to do all of these because of his strategy of investing in businesses that are inflation-proof. Ackman has also said in some news interviews that we need to prepare for inflation in 2024 as it may not slow down. So what is inflation? Inflation is the general increase in the prices of goods and services over time. It means that money you have today will buy you fewer things tomorrow. If a loaf of bread costs $1 today, but $1.10 next year, that means that it has a 10% inflation rate. This means that you will need more money to buy the same amount of bread next year. So how does inflation affect you and your financial goals? Well, if you want to be a millionaire, you need to invest your money wisely. You need to find businesses that can grow faster than inflation and generate more profits and cash flow. That is, you need to find businesses that are inflation-proof. But what are inflation-proof businesses and how can you identify them? Well, we are going to explore just that in just a moment, so keep watching. If you're enjoying this video and finding it helpful, please hit the like button and subscribe to our channel so you never miss an episode. Now let's talk about what an inflation-proof business is. Well, they are businesses that can maintain or increase their revenue and profits even when inflation is high. And the first characteristic of an inflation-proof business is that it offers essential goods and services, things that people need regardless of the economic situation, such as food, healthcare, education, etc. These businesses have a steady demand and can pass on the cost of inflation to their customers without losing them. For example, Chipotle is one of the businesses Ackman has in his portfolio. It is also a fast, casual restaurant chain that offers fresh and healthy Mexican food. People love Chipotle, and they are willing to pay more for it, even when the prices of ingredients go up. Chipotle has increased its menu prices by 4% in 2021 and by another 4% in 2022. But its sales and earnings have also grown by 14% and 23% respectively in the same period. Even during inflation, its sales increased. Inflation-proof businesses have strong brands that can increase customer loyalty and pricing power, such as Hilton, Lowe's, etc. These businesses have a competitive edge over their rivals and can charge a premium for their products or services. They can also attract more customers and expand their market share. Hilton is a global hotel chain that has a reputation for quality and service. Hilton has a loyal customer base of over 112 million members in its loyalty program. Hilton Honors. Hilton can raise its room rates and fees without losing its guests. This level of loyalty means they can maintain profitability even during inflation by increasing fees. Another characteristic is high cash flow. These businesses have low capital intensity and high free cash flow generation, meaning they don't need to spend a lot of money on maintaining or expanding their operations, and they can generate more cash than they spend. These businesses have a high return on invested capital and can invest their cash flow in growth opportunities or return it to the shareholders. Howard Hughes is a real estate development company that owns, manages, and develops master plan communities, mixed-use properties, and office buildings in the U.S. Howard Hughes has a low debt level and high cash flow margin, and it can leverage its land portfolio and development pipeline to create value for its shareholders. Characteristic number 4 is high competitive advantage. Canadian Pacific Kansas City is a railway company that was formed by the merger of Canadian Pacific and Kansas City Southern in 2022. The merger created the first rail network that connects Canada, the U.S., and Mexico, and it gave the company access to key markets and trade corridors. Canadian Pacific Kansas City has a competitive advantage over trucking and other railroads, and it can offer faster, cheaper, and more reliable transportation services to its customers. It has increased its revenue by 12% and its earnings by 15% in 2023, and it expects to grow even more in 2024 and beyond. Businesses like this have a competitive advantage that protect them from the rivals and allow them to grow their market share. They have a moat that makes it hard for competitors to enter or challenge their market position. They can also benefit from economies of scale, network effects, or regulatory barriers. Now let's take a look at some other principles and techniques to beat inflation. Bill Ackman's investment style is also based on these principles and techniques. Focus on undervalued and underperforming companies. Ackman focuses on buying these type of companies that have great potential and then turning them around for a profit. He looks for companies that have strong business models, attractive growth prospects, and competitive advantages, but are trading at a discount to their intrinsic value due to temporary or fixable problems. He also runs a concentrated portfolio of only a few stocks that he knows well and researches thoroughly. He ignores short-term noise and bases his decisions on long-term fundamentals. He believes that quality is more important than quantity, and that diversification is overrated. A show of this is how he currently holds only 7 stocks in his portfolio, which are Agilent Technologies, Domino's Pizza, Hilton Worldwide, Howard Hughes, Lowe's, Restaurant Brands International, and Canadian Pacific Kansas City. He has written and spoke extensively about why he likes these businesses and what he expects from them in the future. Adaptability to changing market. He learns from his mistakes and adapts to changing market condition. He also diversifies his portfolio by investing in different sectors and geographies. He recognizes that he is not infallible and that he can make errors of judgment or execution. In adapting to the market, he made a brilliant move by buying credit default swaps, a type of insurance that pays off when a company defaults on its debt, in early 2020, when the coronavirus pandemic was starting to spread across the world. He anticipated that the pandemic would cause a global economic crisis and that many companies would struggle to pay their debts. He paid $27 million for these credit default swaps, and he sold them for $2.6 billion in March 2020, making a 100-fold return on his investment. So these are some of the tips and lessons that you can learn from Bill Ackman and his investment strategy. He is a great example of how to be a millionaire by investing in inflation-proof businesses and following a unique strategy. But remember, investing is not a game of luck or chance. It is a game of skill and knowledge. You need to do your own research and due diligence before investing in any company. You need to understand the business model, the growth potential, and competitive advantage and valuation of the company. You need to ignore the noise and focus on the fundamentals. You need to have a long-term vision and clear goal. And don't forget to have fun and enjoy the process. That's it for today's episode. I hope you enjoyed it and learned something new. If you did, please hit the like button and leave a comment below. Thank you for watching, and I'll see you in the next episode.